Hey everybody, I'm Mike DeSepoli and welcome to episode 63 of the Ask the Advisor show. In today's episode, I'd like to discuss some huge mistakes that investors are making in the stock market. I thought this would be a good topic to discuss in today's show, given all the recent volatility and big swings in the marketplace. It's times like that that tend to push investors a little bit outside their comfort zone and make them start doing things in their strategy that they may not do otherwise. So I wanted to highlight a couple of these huge mistakes here today so you can make sure that you avoid these mistakes in your own personal portfolios. So the first mistake, and a huge mistake that we see a lot of people make, is thinking that they can time the market. You cannot time the stock market. It is a task that is just impossible to do on a consistent basis. There's a lot of different variables that go into the way and the movements that the stock market makes. There's economic data, there's other financial news that we need to digest. There's a lot of the different pieces that come together of the economy that drive different trends. There's just so much that goes into it that it is a very difficult, nearly impossible task to do on a consistent and successful basis. So the biggest mistake people think is that they can time the market. We recommend a longer term strategy where you invest in the market, you dollar cost average into your positions, and over the long term you'll have better success. That doesn't mean that you can't find a buying opportunity when a correction in the market presents itself, but we don't think you should be jumping in and out. We think that's a very difficult thing to succeed at. The second huge mistake that people make is buying a stock just because somebody else did. Somebody you know, it could be a family member. This also applies to television hosts, news media. Just because you heard somebody recommend a stock or talk about buying a stock for themselves does not mean that A, it's a good investment at all, or B, that it's a good investment for you. Everybody's situation is different, so it's important that you understand what the investment is, what the company does, and how it may or may not perform before you ever put your own personal dollars into it. And this is particularly big with people watching the quote-unquote financial experts on television. They recommend a whole litany of stocks, and then people think that they need to jump on that and put them in their portfolio. We would strongly advise against doing that. Third huge mistake people make, this is more seasoned investors that we see this with, is obsessing over dividends, okay? People that are chasing a particular stock because the dividend yield or the rate that they pay out income is very high. We hear this a lot of times from people that manage their own portfolios. Oh, this stock has an 8% dividend, 10%, 12%. Well, the reason that dividend is so high is because there is an imminent level of risk presented in that security, and that's why the dividend is so high. So don't get caught up chasing high dividend securities. You'll end up chasing something with an 8 or 10% dividend, but you'll end up losing 20% of your principal, and that's something you need to be careful with. So always know what you're investing in before you do so. And number 4, the biggest mistake people make, the single-handedly the largest, is getting caught up in the day-to-day gyrations of the market, allowing it to affect your emotions and in turn affect your investment strategy. If you are a long-term investor, that you have 10, 15, 20 years in your time horizon before you need the money in that portfolio, you could care less, or you should care less, about the day-to-day movements of the stock market. Whether the market is up or down, it shouldn't matter to you in the grand scheme of things and over the long term. Try to get in the habit of maybe checking your portfolio once a week or once a month if that's something that works well for you, but you shouldn't be checking it every day, every minute, every hour. It's just not healthy. These are just a couple of huge mistakes that investors tend to make in the stock market. Obviously, there's many others. If you have any out there that you've heard of, or maybe mistakes that you've made yourself, please, we would love for you to share those with us, with our other viewers, so we can make sure that nobody makes those mistakes too. Thanks so much for tuning in, guys. We'll see you back next week for episode 64.